Welcome to Policy on Demand's Week in Review. I'm Karl Russo. This week, the Federal Reserve Board's Open Market Committee lowered interest rates by 25 basis points as markets had expected, but signaled there may be fewer additional reductions next year in rates than were forecast after the September meeting. Highlighting tensions between continued vigilance on fighting inflation and concerns about any weakness in the labor market, there were 3 dissenting votes for the first time since 2019. With 2 members preferring to keep interest rates unchanged and 1 member pushing for a larger 50 basis point reduction. On the legislative front, no resolution has been reached on proposals to address expiring enhancements to the healthcare insurance subsidies. With competing Senate proposals unable to achieve sufficient support and prospects uncertain in the House, affordability as it relates to healthcare is likely to remain an issue in 2026. Meanwhile, the House Ways and Means Committee approved a 3-year extension of certain trade preference programs for sub-Saharan African countries and Haiti. Companies continue to await further guidance from Treasury on implementing provisions of the reconciliation bill, including energy credit provisions under Section 45Q, given the EPA's elimination of the greenhouse gas measurement rules, and on the corporate alternative minimum tax and interactions with provisions for research and experimentation expenditures. Outside of Washington, this week also saw election results in the runoff race for mayor of Miami. The Democrat won for the first time since 1998. This continues a series of Democratic overperformance in off-year elections that has raised their hopes for performance in the midterm elections in 2026 and represents another warning sign for Republicans as they try to buck historical trends and hold the House, with Democrats needing to gain only single-digit seats to take the majority. Turning abroad, as the world awaits further details on implementation of a so-called side-by-side agreement with respect to Pillar 2's undertaxed profits rule and U.S. companies, Estonia this week issued a statement declining to endorse the side-by-side system that would exempt major economies from key minimum tax provisions. The country's finance minister raised concerns about the substantial compliance costs relative to the revenue the global minimum tax would yield. Concerns were also raised that the significant differential burdens on EU companies could place them at a disadvantage relative to their global competitors. Stay tuned to Policy on Demand for future developments in the world of tax, and take care.